We're here today with Kain Warwick, founder of Synthetix, a protocol that at one point had about $3 billion in total value locked, and founder of Infinex, of course.
We were so far away from mainstream conversation, and now we've got a sitting president who's launching meme coins. It's quite a turnaround. I think DeFi did a lot of things right, but eventually we hit a bit of a brick wall. If you were in the trenches, your only option was really to buy meme coins. We just didn't make it accessible enough. If you are a person who is randomly participating in ICOs, you're probably just going to get your face ripped off.
What's the impact you're kind of seeing of AI agents and crypto on-chain innovation?
The opportunity is very large. I don't think we're there yet. That either has to be much better than a person, or you'd be better off just having a person do it.
Thank you for tuning into another episode of the TEACHMEDEFI podcast. We're back from a bit of a break, and we're back with a great episode and a great guest. We're here today for the second time with Kain Warwick, founder of Synthetix, a protocol that at one point had about $3 billion in total value locked, and founder of Infinex, of course. Hey man, how are you?
Yeah, thanks for having me back.
Sweet. Perhaps we start right off the bat with the stuff that's been going on just this week with the Trump meme coin launching, and I think even another one just launched. So on the spectrum of this is horrible for crypto to this is amazing, send it to the moon, where do you fall?
I think I fall probably closer to moon than horrible, just on the basis of attention is, a good thing. And it's easy to sort of sit here and say, oh, we don't love the way that this was done, or we don't, like this aspect or whatever. But the fact that there's a president launching meme coins on Solana was not, part of my bingo card for 2025. Even if you go back to whenever it was, I think like July of last year, when the Mog guy asked the question to Trump, right, which kind of triggered this whole cascade. We were so far away from mainstream conversation, other than the anti-crypto army, Warren Gensler crowd, right? Like that was kind of the only time that crypto got into the mainstream consciousness, and now we've got a sitting president, as of tomorrow, right, who's launching meme coins. It's quite a turnaround.
It's a wild timeline we're in, isn't it?
It really is. It really is.
Sweet. You've talked about being one of the people who created actually the problems that we have in crypto today. So I'm curious of that self-reflective sort of stance. What are these problems? How are you helping to solve them now?
I think DeFi did a lot of things right, but also got a lot of things wrong, especially early DeFi. We were building for enthusiasts. We were building for people that were ideologically aligned, particularly in the Ethereum community, with these ideas of censorship resistance, decentralization. And it pushed us down a path which I think got us a lot of momentum in the early days because of who the audience was. But eventually we hit a bit of a brick wall, right? And we weren't able to kind of break through it. And we ran out of enthusiasts and early adopters. And what happened is a lot of the newer people that came into the space in 2017, 2018, and then again in 2020 and 2021 ended up on centralized exchanges. The vast majority of them, right? So, we ended up in a situation where a lot of, in fact, the majority of crypto transactions happen inside a centralized database. Despite the fact that we've got DeFi and we have all of this amazing technology, we just didn't make it accessible enough. And so, Infinex is trying to kind of lean into this idea of making on-chain transactions more accessible for everyone, and bridging that UX gap between on-chain and, say, Binance or other centralized exchanges.
Right. And tell me a bit more about Infinex. We talked about this the last time you were on the show, but it's been a few months now. What's new? What are you still focused on Infinex? What are you excited about?
I guess the point of Infinex is to, again, enable all of the things that you can do on chain, right? To be much easier. And even if you look at simple things like buying a token, right? Talking about the Trump meme coin, it was available first in places like Phantom, on Jupiter, through Meteora and AMM. And so if you weren't in the trenches on chain, you had to wait until the first listing, which took about 4 hours. And that was a very expensive 4 hours, right? It went from, a 300 mil market cap to about a 10 billion market cap in the space of about 3 hours. And so, for a lot of people who were sitting on Binance or Bybit or Coinbase, I mean, Coinbase still hasn't listed it. If you're stuck in the States, you're only on centralized exchanges, you're still waiting to be able to buy it. I think Robinhood just listed it today. So we want to make getting on chain and getting access to these things much easier and safer. And so that's what Infinex is trying to do. So the first major feature that we've released is Swidge, which allows people to swap and bridge between about 8 different networks across about 1,000 assets, including Trump.
Okay. I think like one of the official reasons that the SEC was giving, because I think, US citizens cannot participate in a lot of these things, right? Like I think token launches often, they say that they're, if you're from the US, you can't, and other countries, you can't participate in this sort of thing. And I think it's always under the veil of like investor protection or something like that.
Yeah, I mean, it's just the chilling effect of this kind of crusade that was being pursued by Gensler, right? It wasn't that you can't do it. It was that people were sort of hedging their bets and saying, well, in absence of certainty, I'll just geo-block the entire US. I actually tweeted about this this morning. I said, if you've been geo-blocking the US, it's probably time to just quietly remove it and pretend that you weren't rugging everyone in the US for the last 4 years, right? And while it might have made sense for someone to do that, they were trying to de-risk, right, given the uncertainty. My view the entire time has been that geo-blocking the US is just absolutely backwards. It's not the solution to these problems. What we need is some clarity about what you can and can't do. Most of the projects that are run out of the US, Uniswap, a lot of the centralized exchanges, they're good actors. They're trying to move the space forward, but they've been in this situation where they've been in the crosshairs of this crazy crusade by the SEC and Gensler, and they had to play defense a lot of the time. Thankfully, Coinbase has been on the offense for the last 6 months, but most of the last 3 or 4 years, DeFi and other major crypto projects have been playing defense.
So I kind of read you as increasing access, permissionless access to these sort of financial primitives are a net positive. Is that correct?
I mean, like blocking airdrops to US users is just absolute insanity. There is no justification for it. There's no legal theory that really justifies why you should be doing that. Right. The only reason why people are doing that is out of fear. If you're a founder in the US and you go and talk to a lawyer, they're like, you could do anything, but I recommend you don't. Right. And so if you're trying to be as de-risked as possible from a regulatory standpoint and trying to not, get in the crosshairs of the SEC, which has been the game everyone's been playing for, again, the last 3 or 4 years, don't do anything that's going to attract their attention, right? And a large airdrop would do that. And so people just defaulted to geo-blocking US people. And you saw, many of the large airdrops from US projects just blocked US people completely. Some were not even in the US, which is even wilder, right? If you're in Europe and you're blocking the US from your airdrop, like that's like insanity. So, I think we'll see that kind of behavior just disappear completely in the next, hopefully few months.
So these are sort of second order effects of unclear rules and guidelines in terms of
I think it was unclear rules and guidelines, But there was a point in time about probably 2 years ago where it went from, look, there's a lack of clarity and we need to educate the regulators because, again, we're good actors and we're trying to build these fair and transparent markets, to, oh, they actually hate us and they're trying to kill us, and at that point it's like, okay, well, if someone's trying to kill me, like, I can't educate them into not wanting to kill me. They just don't want me to exist, right? And so I think, again, from that point on, it became very much playing defense. And especially if you were a small project or, a first-time founder that hadn't raised much money, the SEC was literally going out and targeting those projects, again, to create this chilling effect. Because if you go and take down Open, for example, right, two young founders that didn't raise much money, never sold a token, and you go and get a settlement out of them and basically drive them out of crypto, everyone else is going to be afraid. Like, you got a crazy person who just walks into someone's house and blows someone's brains out. Everyone's going to be like, what am I next? Right. And so
it's like making an example of someone.
Yeah, totally. But picking like the person who's least likely to fight back, which is why it's been so impressive for, Coinbase and Uniswap and Consensus and a few other people to step up and say, whoa, whoa, whoa. The only way that you stop a bully is you walk up to them and you punch them in the face, right? And that's what started to happen. And, the SEC was sort of on the back foot for the last 6 months, which was great. But, again, I think we're just going to see a very, very large shift away from that. Hopefully we get some clarity. But even if we don't get clarity, just having someone not wandering around blowing people's brains out is going to be great.
Yeah. Yeah. It's an interesting vibe shift that is happening. Let's talk about user experience for a second. That is also something that you're working on with Infinex. I used the app before, and it was really like a smooth flow, especially if you're not that familiar with crypto, so you're not a power user. And you actually accepted, I think, a Crypto UX award back in 2018 at DevCon for your project Haven. Is that pronounced correctly?
Yeah, that's right. Yeah, Haven, yeah.
Right. Do you know Nikita Beer?
I do, yeah.
Yeah. For the audience, he's a well-known developer that builds consumer apps that grow fast in users. He posted something about crypto. He said that crypto founders wake every day and boldly ask the question, what if we made the design the worst it could possibly be? Is he right?
I think he is right, because the trade-offs we've been making are the wrong set of trade-offs, right? They were the right set of trade-offs in the early days because we needed to prove that these things were possible, that you could build decentralized, permissionless, censorship-resistant protocols and platforms, and we did that. And there's a lot of learning and cost that goes into using a platform like that, right? It's very high friction. What we didn't do was then take the next step and be like, okay, how do we make these things that are inherently, permissionless and decentralized? How do we make them more accessible, right? With the right set of trade-offs. And so again, this is what Infinex does. We just make the right set of trade-offs where we're non-custodial, but that doesn't mean that the UX is bad. We have very good UX, but we maintain non-custodial posture, right? So it's a different set of trade-offs. We're not censorship resistant. If you shut down the Infinex platform, then you can't do transactions on Infinex anymore. But the good thing is that if you shut down Infinex, you don't touch the protocols. So you can still trade on Uniswap, you can still trade on Jupiter, even if Infinex is nuked from space, right? So, it's okay for Infinex to be censorable because the underlying protocols are not censorable. And the underlying chain, Ethereum and Solana, are not censorable. So when you have those properties, you can actually make a different set of trade-offs and make the thing much more usable.
Right. And you'll give us a bit of a showcase soon. Actually, it was also funny. I think Mert from Helios Labs commented on that post and said, crypto founders wake and ask, what if we literally just didn't have a product to begin with?
Yeah, I mean, again, a lot of what we've been building has been infrastructure, right? And infrastructure is very valuable, and you need infrastructure. I'm very glad that the ecosystem has invested so much in infrastructure, because there are a lot of infrastructure projects that Infinex is using. We've been able to just pick up and roll them out. And so, that infrastructure investment has been very useful, but you just need someone to turn up and actually package it up for a user into an application.
Right. I guess another topic that I'd be interested to talk about is something we talked about last time on the podcast. It was sort of around price discovery, retail versus institutional investors, and the opportunities, the upside you can still participate in. And I think it was in the context of a post Kobe had made at the time, saying that for retail, a lot of this access has vanished and moved into the private markets, a large part of the price discovery. So basically, retail investors are left on the sidelines, and VCs and accredited investors can still invest early and benefit and get in those private token sale rounds, while retail is largely excluded from that. And it used to be more like the token would be publicly listed more quickly. So you could then buy it on public exchanges and participate in the price discovery and the upside. There's a few new developments on that front. Well, speaking of Kobe, I guess he launched echo.xyz, for example, where you can sort of co-invest in groups with others in early stage startups and tokens. There also are ICOs still on platforms like CoinList, I suppose. What's your take on this? The developments, the direction? Yeah.
I mean, like Echo has absolutely shifted the meta, right? I think, there's been probably 3 or 4 very large sales that have driven a lot of attention to the platform. And the people who went into those sales got exposure and access to things that they would have had absolutely zero chance of getting access to. I think Athena was one, Mega ETH was another. You just would not have had a way of getting an investment into Mega ETH if it weren't for the Echo platform. That's kind of the only option so far. Or if you weren't a KOL or an angel investor or a VC. So I think that's a huge shift. Right? There was a period of time where if you were in the trenches, your only option was really to buy meme coins, and now you've got access to early stage. And the most interesting thing about this has been the shift earlier and earlier. I tweeted the other day that I think some projects are just going to basically YOLO their entire raise via Echo, right? Rather than doing multiple raises, a seed, Series A, pre-TG, etc. They can just go to Echo, build something, and it's a much better and more efficient ICO. And the reason why it's a better and more efficient ICO is because you actually have people that are curating the deals that have much better alignment. The platform has alignment, the deal and group leads have alignment, and the projects have alignment with the people actually investing. So as opposed to ICOs where you just were trying to max attention and then put a contract address out there and see how much money you could bring in. The mechanism design of Echo is much more aligned for all of the parties involved. So I think we're going to see more and more projects, especially once some of the projects that have already done Echo raises start doing really well on market after TGE. I think that will push even more attention. So I'm super bullish. I think it's one of the biggest shifts this cycle has been the existence of Echo.
Let me double click on that and see if I understand this correctly or not. What's the issue with just ICO, right? Like in that case, I could invest directly myself. Now I have to be part of a group and align myself with the investor lead. I think he makes the decision. He gets, I think, a cut. Are you saying, for example, that these investor leads have better understanding or education in terms of which deals to pick, or what is the
better curation, right? So I'll give you an example. I mean, the most dangerous thing you can do as a trader is be exposed to adverse selection, right? And so if you are a person buying ICOs that are just popping up randomly, right? And if we go back to 2017, ICOs were very good, but they were also very bad simultaneously, right? Different set of trade-offs, right? And, there were many, many ICOs, probably 90% plus, whether they were intentionally scams or they were just, poorly managed, they went to zero very quickly, right? And so if you are a person who is randomly participating in ICOs and have no particular skill in investing or access to deal flow, you're probably just going to get your face ripped off. You might luck into one or two good ICOs, but most likely you're going to have 9 out of 10 ICOs are going to be bad for you, right? And negative EV. Now, that one ICO that you go into may well pay back the other 9. Right. Especially back in the early days of ICOs, most of the ICOs were a lot better in the early days. Towards the end, it started getting crazy and you just had people coming in and it was cash grabs. So, okay, you're a late stage ICO investor. You have no particular skill in picking ICOs, right? You're probably going to get your face ripped off. The difference with Echo is you have people that are curating the deal flow, a group lead who is incentivized to bring in only good deals, right? And kind of push away scams. And if you're in the right groups and you got into them for the right reasons, whether there's some selection criteria or whatever, you are probably going to have a better experience than if you were just picking those things yourself, because the deal flow that someone let's say Larry from the block, right, who runs the Big Brain Collective, his deal flow is better than yours. It's better than mine, right? It's better than most people's. And so if he's curating the deals, just inherently, you're going to be better off than you throwing darts at a dartboard with an ICO, right? If you have better deal flow than Larry, well, then you're not investing in ICOs, right? And so there is this alignment where, there's this kind of symbiotic relationship where, and this is the thing that I didn't see initially, right? But I've seen now where there's a feedback loop of Larry's deal flow today is better than it was 6 months ago because he has a good group. And so now all of a sudden, good projects are like, well, I want to go to Larry because he's got the good group, right? And Larry, therefore, his deal flow gets better. And if you're in that group, and it's not easy to get in that group, right? But the good thing about it is you can get into that group by just being smart, not necessarily by being rich or being a KOL. So if you've been in the trenches, you know the lore, you can pass Larry's test because you're, just like perpetually online, right? And paying attention to the space. You now have access to probably the best deal flow in the space, realistically, right? And it's only going to get better as this feedback loop increases. So that was something that I kind of mid-curved it, right? At first, I was like, why would someone give up, deal flow into something that's highly contested, right? If they can only put 50 grand in, why would they give that up? The reality is now, actually, instead of getting a 50 grand check, which is what maybe an angel might have been able to get, all of a sudden you're getting a 500K check, and you can then dole that out to your group. And again, you've got this positive feedback loop where you've got well-curated deals, a well-curated group, well-curated projects coming through, and it's a positive flywheel versus ICOs, which were arguably too permissionless, right? Now you could say, well, okay, market forces would have solved that, but Echo is kind of the market forces coming in and solving it. It just took an extra 6 years because ICOs were killed. And it took the market getting so bad and capital formation getting so bad because of 4 years of, very poor regulatory posture, that someone came along and said, you know what, I'm going to fix this. Like someone who had enough influence in the space, enough funding to be able to just turn up and say, we're in this inadequate equilibrium. I'm going to break it. Very few people can pull that off. And Kobe is one of them. And he managed to do it. And now we've got something that's better than ICOs, right? So we don't need to go back to just spray and pray crazy ICO madness, right? We've actually got something that is a better system with better mechanism design. So, again, like a lot of things, right? There's unintended consequences or feedback loops you don't initially see. But this is one of the ones that I've been kind of blown away by how effective it's actually been.
Okay, interesting. That makes much more sense. So practically speaking, I'm sure some people are curious now that you mentioned it. You said, for example, the group of Larry, right? You said if you're smart, you can join. You don't need capital. So how do you actually join these groups? Like how does that work?
Yeah, so you have to apply to a group. A lot of groups will let in a lot of people, and then also you've got the kind of open economist group, which is everyone. Now, the interesting thing about the economist group is you have a first come first serve model, which means that if if the check size and everything lines up such that maybe only 10% of people are going to get in a deal, there is a little bit of skill to that, right? You need to know that the deal's on, you need to be paying attention, you need to have funded your account and gone through all of the process, so there's a little bit of skill, but there's also a little bit of luck, right? There's a little bit of randomness to it, but even still, you're getting access to deals that even a VC couldn't get access to in some cases, right?
That part is more similar to CoinList, right? This sort of.
Yeah, I mean, it's similar to CoinList, except CoinList is bad. So CoinList, the incentives are messed up, right? The incentive for CoinList is to maximize the price of a round, right? Because they're taking a cut of the money raised rather than taking a carry, right, on a profitable trade. So VCs have good alignment with their LPs, ish, right? It's not perfect, but it's better, right? If you're a platform that is incentivized based on total volume through, right, then you're just going to jack that up, which is directly at the expense of the people going into the deals, right?
But how does Echo that get its cut?
They take carry. So Echo takes carry from every deal, right? But that means the deal has to be good. Like if I just jam a scam L1 down your throat at a 10 billion val, right? That's great for me if I'm getting 10% of that, right? Not so good for the person who is on the other side of it. Whereas if my incentive is to put pressure on the teams and founders to lower the price as much as possible. Yes, what that means is you have a lot of demand into something for which there's not a lot of size, right? Okay, fine. If they're, let's say, mega ETH, right? I think it was like $10 million or something like that that was invested, right? There was, at that price, there was $200 million worth of demand. Right. So it's constrained, of course, right? If you make the price so good, then everyone's going to want to get in. And, everyone gets a small ticket, but it's better to get a lucky small ticket into something at a very good price than jack the price up to 10 billion and everyone pays a bad price. Like that's just negative EV, right? So the incentives are not aligned with CoinList. Whereas, the good thing is, again, Kobe looked at the market and said, well, why don't we align incentives? Here's the optimal way to do it. And he could pull it off. If you were just a random founder, it would have been harder to do that, to break that equilibrium. And even still, right? Like there's VCs, and even CoinList, I think, has been fudding Echo, as well as some VCs who are not liking this trend because it is bad for them, right? It's breaking this kind of cabal that they have.
Exclusivity,
so,
yeah.
Exactly.
Mm.
Yeah.
It's sort of like the show me the incentives, I'll show you the outcomes type of thing. Yeah.
100%, and again, ICOs were great. I'm not saying ICOs were bad, but they were by no means incentive aligned, right? But I'll take laissez-faire, permissionless capital formation over VC cabals, which is what we got instead, right? So it went from pure craziness over here to no one had access. We've kind of brought it back into the middle, right? Which is something that is better than both sides of that equation.
Yeah, I like that framing. We're seeing a lot of memes like go around, kind of like about how can you sum them up? I guess Solana is thriving and ETH not so much. It's a lot like about price, so price is not moving on ETH, and Solana is going well. And they're funny memes, I gotta say. It's a strong game. So let's talk about that for a sec. I think Vitalik just posted recently as well something about sort of the strategy going forward at Ethereum Foundation. that got a lot of attention, and people sharing their opinion on it. So does ETH L1 need to move faster? What does the DeFi world sort of look like on L1? What's your take overall on this topic?
I think that the scaling roadmap has worked, right, almost too well. And so we're in a situation now where ETH has scaled, but if you are an interested party that wants exposure to ETH, what do you buy? If you're working just on, if you're working on technical analysis, right, then you would probably say nothing, right? But if you're working on some kind of weird unit bias or something like that, maybe you buy ARB or OP. You can't even buy Base. The network you're on, there is no Base token, so you can't buy that, right? So you might think, oh, buy ETH, but then you look at the chart and you go, ooh, that doesn't look great either. And so there's no real good option for someone who is in the ETH ecosystem using Base. A lot of them are just buying either Base, sometimes Base memes, but Base DeFi has been doing quite well as well. Moonwell, Aerodrome, BMX. There's a bunch of DeFi projects that have been doing very well, over the last, say, 3 to 6 months. So people are like, they're trying to get exposure to the ecosystem. They just don't really know, what to necessarily buy, because ETH just from a price action perspective doesn't look like a great buy. The chart doesn't look great, right? And so I think the underlying issue there is that you've kind of created this fragmentation, right? Where there's now 5, 6, 7, 8 potential L2 tokens that someone could buy, right? And I think that if your goal was to make ETH investable, right? Which it is not the goal of the EF, right? The goal of the EF is something different, right? But if you were running an organization whose job was to make ETH investable, this would be your primary problem to solve, right? Is how do we actually make it clear to an interested party that's using the Ethereum ecosystem what to buy to get exposure to it, right? We have made it max difficulty. Like we have jacked the difficulty up to 11. It is almost impossible for you as an interested party in the Ethereum ecosystem to know what to buy, right? Nothing looks good. Everything's confusing. You really need to be in the trenches to know what to buy. And those are fixable problems. There's a little bit of education. There's a little bit of incentive alignment. Several people have thrown out very interesting solutions to this, right? Like Martin Koppelman suggested enshrining L2s. Now, Martin is a very smart guy, but I think that sometimes tokenomics is not necessarily his strong suit from like a price action perspective, right? It's not what he's going for. He's going for let's call it like intellectual efficiency or something like that, right? The Gnosis team has always been, very much about, building things that are aligned. But if you take that idea a step further and say, okay, well, what if we got rid of all the L2 tokens? What would happen then, right? Or even, I tweeted today, like, what if we forced the L2s to, instead of keeping all their sequencer revenue, to use it to buy back and burn ETH? Like the L1 is in control here, right? We've sort of forgotten it because there's no one in the L1 that is thinking about what the best mechanism and incentive structure is for the L1 asset, right? Or if they are, they're doing a terrible job of it, right? So my assumption is that they're not, because these are smart people, right? But they're thinking about like what the scaling roadmap looks like, different approaches to consensus and, client diversity and solo staking and like all things that are very, very important. And you absolutely have to have those things for ETH to have a narrative. But then you also need to make sure that it is an investable asset. And at the moment, it's just not, it's not clearly an investable asset. The narratives have kind of drifted. Even issuance, right? Like there was a very, very bearish chart that someone posted of like, post 1559, like it goes down and then it just turns around and starts creeping back up, right? Because blob space got so cheap. And again, I just think that these are solvable problems, but there's no one in a position who's actually trying to solve them. And I think that there is a view that we need to replace the EF leadership with people that are going to think about this. To be completely honest, the people that have been proposed as replacement heads of the EF, I'm not sure if this is what they're going to do, but someone needs to do it. Now, someone else, I think it was like Constantine from Lido, was like, maybe we should just create another EF, right? Like a marketing EF or like a tokenomics EF or something, right? Because again, this is a permissionless system. Anyone could turn up and say, here is my proposal and here's why I think we should do it. 1559 was that. Like 1559 was so hard to get through. It took so much effort from so many people in the community to get 1559 out, and years of effort and like raising money when we were all, poverty stricken and like paying for audits. There was a bunch of crazy stuff that needed to happen in the background to get it live. You can do stuff to ETH. It is an open system. So anyone could turn up and say, okay, we're going to fix the overall incentive alignment between L2 tokens and ETH. And here's what we're going to do, because the L1 is in charge. It's just the problem is that no one's in charge of the L1. So someone needs to come with like a really clear proposal in my mind.
Okay. Yeah. You mentioned fragmentation there as well. That's a big issue too. You got all these L2s bridging, and then you need a gas token or whatever.
So Infinex solves that part, right? But it doesn't solve the investability part, right? We can abstract everything away for you and make it very easy to have your assets on any chain, but that doesn't tell you which one to buy.
Yeah, no, that makes sense. But it improves access, right? And it makes it more smooth to use the primitives, the different chains that are out there. So I think it's nice and tangible if you just give us a bit of a showcase and we can see what that looks like.
Yeah, sure. Let's bring it up and I'll run a little demo. So yeah, this is Swidge, which is swap and bridge, and we've got 2 Solana tokens here. Let's see. I might not have any ETH on this side. Let's go with 2 base and we'll buy ETH first. So we'll max that out. All right. Let's go quickest. This is a new feature. So it's asking me to sign with my passkey. So we use passkeys for basically all signatures. So you don't need to actually sign with an external wallet or connect a browser wallet or a hardware wallet or anything like that. We use passkeys for authentication. So yeah, we're doing WIF to ETH on base. And let's see, because Solana's been, oh no, okay, there we go, easy. Looks like Solana's back in action, which is good. So we can open this. No, that's not going to work. All right, we'll stay here. So let's go back. Now we've got something on base. We've got some ETH on base. Let's go back to Solana. Let's see. All right, so we're going to go from ETH base back to Solana. And again, these are all things that these are all things you can do. But the nice thing is that you have all of your assets in a single platform that's accessible via a passkey. So if you're on iOS, you can have the passkey that is in your password manager, whether you use a password manager or you can have it in iCloud. And you can go from your iPhone, log in on your iPhone, do a trade, and then you can pull it up on your Oh, there's the little Easter egg. I've been waiting to see that. I don't know if you caught that, the stonk head popping up there. So basically, you've got this really simple interface that has all of your assets across all of your chains, and you can very easily log in from whatever device you've got and quickly do a trade or bridge or get funds wherever you need to. We're talking about Echo. One of the challenges that people have with Echo is it's USDC on base, right? And no one wants to be just holding USDC on base because it doesn't earn any yield. So everyone has USDE on Arbitrum earning a yield, right? Or on mainnet maybe, and then they have to go from mainnet to USDC on base very quickly. But it's actually painful because sometimes you're like, oh, I didn't have my ledger with me. And so, a deal pops up on Echo and people get wrecked because they can't get funds in there quick enough, right? And with Infinex, we've already seen people starting to use it where they're like, I just pull up my phone, 2 clicks, and the funds are in Echo and it's done, right? They usually still miss the deal because the deals go that quickly, but it's the easiest way, no matter kind of where you are, whether you're at work or at home or on the train or whatever, to just move funds around and not worry about gas, not worry about where did I put this thing, what assets have I got? Much easier. So that's the idea, is to really just turn it into this kind of magical experience where you don't need to think about chains, you don't need to think about gas, you don't need to think about which asset is where. You just open up your account and everything's accessible.
Right. Okay. So in your example, then I could transfer, let's say, from Coinbase USDC to let's say my wallet on Base, but I'd probably need ETH for the gas fee, right?
Correct. Yeah.
Okay. So if I use Infinex in that case, there's no gas fee for this. Like, you're sponsoring
Correct.
it, I believe.
Yeah, we sponsor the ETH. Yeah, we sponsor gas fee.
Okay. And you can do that because it's gotten so low, so to say, on these L2s.
Exactly. Yeah. So we have like a gas offset that we use to basically offset the cost of gas, but there's no incremental fee on top of that. We're still dialing that. This is still in closed beta. It's only available to patrons right now, but by the time this airs, it should be open to everyone. And basically, what will happen is, if let's say you do a Solana transaction, it's probably 50 cents of gas, maybe less, right? It might be 5 cents. We will calculate that gas and we'll take it out of the destination asset, right? So we don't pay it for you, but you don't need to have it. And the same thing, let's say you want to go and buy an asset on a new chain. Let's say Bearer chain launches and you want to go buy the Bearer token on day one. Normally, you'd need to go and figure out, okay, is it MetaMask that I need to use? Is it Phantom? Is it, Rabby? Is it something else? You need to make sure that you've got the right assets on the right wallet. Then you need to transfer enough gas to go and buy the token on the DEX, whether it's via Ooga Booga or Kodiak or something like that. There's a whole process before you've even done a transaction.
I mean, you lose most people. I'm telling you, like,
sure.
This stuff goes wrong every time. Like,
absolutely.
I mean, I'm a crypto native, right? And so often I go like, okay, I got like 10 minutes to do this thing, like this on-chain thing that I want to do. And it does not take 10 minutes. I'm there for 1 hour or something because some transaction is not going through, something, I'm missing gas, whatever. It's crazy sometimes.
It is crazy. Yeah, it's crazy. And, one of the biggest issues, especially if you're a power user who uses hardware wallets, is there's always weird bugs between, you probably have 2 or 3 different browser extensions, right? And Phantom kind of vampire attack MetaMask and uses the same API, right? So you have dApps that get confused and say, wait, is it Phantom or MetaMask? Again, you sidestep all of that. No browser wallets, no hardware wallets. You can just basically execute a transaction with a passkey, and it's still blockchain, right? So you still have transactions that fail. Things can still go wrong, but they go wrong in a way where it's kind of easier for you to see what happened and easier to know how to retry it. Versus you go to try and sign a transaction and MetaMask just doesn't pop up. and the dApp's like, sorry, error. And it's like, did I sign it? Is it pending? Like, what's happening, right? So, you've abstracted away all of the signatures and all of the signing and, all of the different wallet and gas, challenges. You just say, I have a thing I want to do. I want to buy Bera, and I've got assets somewhere, wherever they are. They're on Solana or they're on Polygon or whatever. And I just want to click 2 buttons and get Bera. That's it. And that's what Infinex does.
Right. Yeah. I mean, yeah, like you said, you got like multiple browser extensions. You got to turn the other off, so the other one picks the transaction up. Or I had one case where I couldn't accept the airdrop. It wasn't working in that one wallet, right? So I wanted to use the other one, but I didn't have my private key in the other one. So I wanted to access it in the other wallet, and I couldn't access it. There was some sort of bug where I couldn't access my freaking private key. So I was like, I had to go in Discords into the wallet's Discord and tech support, ask them what's going on here.
And also, exporting a private key is petrifying.
Exactly.
The last thing you want to be doing, right? You don't want to be exporting your private key and copy and paste it from one browser extension to another. So yeah, we just, again, we sort of sidestep all of that. Private keys are held, in this MPC network that is managed by Turnkey, which is, again, talking about infrastructure. This is amazing infrastructure that's been built out over the last 18 months. And it just, makes it very, very easy to sign a transaction using a passkey rather than having to sign a transaction, via a private key.
All right. So there's no private key on your iCloud then that's encrypted or something, or how does it work?
Exactly. Yeah. The private key is in this MPC network, and the passkey unlocks it. So the passkey gives you access to sign a message, but the private key stays there.
Right. Well, full disclosure, I guess you got still some risks around like that network, right?
Of course, yeah. But the people who built Turnkey also built Coinbase Custody. So the tech is fairly robust. And there's a bunch of things, that you can do as well, especially if you're a power user, and things that we do, where, we will co-sign for transactions. The platform will co-sign, for example, which means that you'd need, the MPC network to be compromised, or for, multiple parties in that network to collude. Plus, they'd have to collude with Infinex. And even then, if you are not actually interacting with the platform, then your assets are at rest, and they're sort of secure. You can't be tricked into signing an incorrect transaction. So there's multiple layers of security to minimize the risk for a user. And then again, if you want to be even more secure about it, you can use on-chain recovery with your own EOA in a hardware wallet that, again, you shouldn't need to use at all, but as a backup, you can have that, right? As a way of getting your funds out. If something goes wrong, you can basically go on chain directly and pull your funds out of the platform.
Okay, that's good. That's a good fallback. Well, another thing I'd be curious to hear you speak about is sort of AI agents. AI agents are a big topic, probably to some extent, as usual, with a narrative. Some stuff is inflated, some stuff is useful and will be useful in the future. But what's the impact you're kind of seeing of AI agents and crypto on-chain innovation in 2025? What are your thoughts?
I think the opportunity is very large, right? We have a very large open structured data set in blockchains, and that's a very good training data for an AI. I haven't yet seen people do a good job of fine tuning. And look, I'm not as caught up with like the absolute latest research right now. The last conversation I had with someone who's building an agent, they said fine tuning is not a thing that people are using. There's other methods now, but there's no question just pulling an off the shelf model like O1 Pro, for example, which I've been using a lot, which is an insanely good model. It's the best one that I've used. It's really, really powerful. Just pulling that and asking it to do something is pretty good, but it's not perfect. And when it comes to doing crypto transactions, you really need it to be perfect, right? I'd rather do something myself than have an AI agent accidentally sign the wrong transaction, right?
Yeah,
Or
have
sign
a
a transaction.
hallucination or something.
Yeah, exactly. One interesting thing is I actually tested O1 Pro about a month ago and was asking it about Athena. I was doing a deep dive into Athena because I couldn't find in their docs anywhere they'd actually changed the supported collateral. So they were taking Bitcoin and using Bitcoin as collateral, but the original model was have someone provide staked ETH and mint against that. And I think they got some pushback around that because it was annoying. You don't, if you're just trying to get yield on a stablecoin, you don't want to be holding a volatile asset even for any amount of time. Especially ETH, right? Like you could lose all your yield in the space that it takes you to actually get it to the person, right? So you've then got a hedge. So they just started taking stablecoins. But the interesting thing was, I asked O1 Pro to give me a breakdown of like who could mint and how they could mint and under what circumstances and what assets, and it got it wrong. But it got it wrong in a way that it was extremely convinced that it was right. And I had to actually like berate it for like 5 minutes to get it to admit that it actually had made it up. Like it really like dug its heels in and it was like, no, like this is true. And I was like, I don't see this anywhere on the website. Like, where are you getting this from? And then eventually it was like, okay, yeah, fine. It's not true. Which is scary, right? Because if you're like, hey, I want, to provide collateral to this protocol, and it's like, yeah, cool, you can, take staked ETH, and it doesn't take staked ETH. What if it sends a staked ETH to the contract? Like that's just crazy, right? So I don't think we're there yet because it either has to be much better than a person, or you'd be better off just having a person do it. Is kind of my view. That said, AI, has a habit of like advancing in kind of fits and starts. And it wouldn't shock me if by the time we get to the end of the year, there is an AI agent that knows everything about on-chain, that's been trained on every single contract and, is able to do things far better than a person. If AI can play Go better than a person, then it should be able to do crypto transactions better than a person. It's just, it needs the right training data, the right model. And I don't know if the right incentives have been there because we're incentivized to just make these, reply guy yapper models and pump our bags. So someone needs to actually get in and do the hard work.
Yeah, I'm curious how that will play out. I mean, the rate of innovation is very rapid, like you said. So probably in 6 months it'll look totally different than today. And I mean, as it is with the growth of knowledge, you can't project that into the future because it's inherently creative, right? So I think that's one of the mistakes that people make. When they say we need to conserve resources, for example, because they project the knowledge we have today into the future, and they say, yeah, these are the resources we have, and so we have to do like an orderly management of resources, but it doesn't take into account that we create resources. Like oil is only a resource because we made it a resource, and in the future we'll make other things into resources in the physical universe. So, and you can project that out. So they go like, they ask today, what is that? So what will that be? We don't know. That's a catch-22, so to say. So I guess that's a bit off topic, but I think people make that mistake a lot, trying to project out things into the future and thinking the future will look like that. But as it's inherently created through creativity, which is unpredictable, you can't do that. Right. I mean, we covered a lot of ground. This was super educational as well. Always a pleasure to have you on the show. But before we wrap this, is there anything else you'd want to mention? And also, please point to where people can get to using Infinex.
Yeah, so the website is infinex.xyz. So you can go and check out the platform there. As I said, by the time people are hearing about this, Switch will be open to everyone. So yeah, jump on the platform, check it out. It is really kind of a magical experience. It makes on-chain so much easier. So I'm very excited for people to check it out and give us feedback.
Awesome. Thank you, Kain, for coming on the show, man.
Yeah, thanks a lot.
And the next one on the tennis court, perhaps.
Yeah, maybe in Dubai. We'll see.
Yeah, we'll see.